nightly business report.
Good evening. Tonight, the Economic Transformation Bill and the Public Financial Management Bill, which are aimed at bolstering the country's economy, presented to the Parliament today. State Finance Minister Ranjit Siyabla says that the new liquor license will be issued only based on factors such as the country's population and tourist arrivals. The Colombo Stock Exchange concludes a short week after 2 days in the red and the final day in the green. And Cinnamon Life kicks off its marketing and accepting bookings to start operations in the third quarter of 2024.
From Studio 24, here's Sanuvi Mudanayaka.
Good evening and thank you for joining us. The Economic Transformation Bill and the Public Financial Management Bill have been presented to the Parliament today. The government says the two significant bills are aimed at bolstering the country's economy.
The parliamentary session had commenced at 9:30 am today, while the Economic Transformation Bill and the Public Financial Management Bill were presented to the Parliament for the first reading. The Economic Transformation Bill will provide provision for the establishment of the Economic Commission Council of Sri Lanka, investment zones, establishment of Sri Lanka Institute of Economics and International Trade, and for the repeal of the Board of Investment Law. State Minister of Finance Shehan Semasinga said recently that the Economic Transformation Bill and the Public Financial Management Bill are designed to enhance the management of public finances, thereby safeguarding against future economic downturns. Explaining the bills, he said the Economic Transformation Law is aimed at preventing future economic collapses and that legislation stems for the vision of the President Ranil Wickremesinghe rather than being proposed by the IMF. The Public Financial Management Bill is said to be presented with a focus of enhancing accountability in managing public finances. The State Minister said that this legislative initiative aligns with the recommendations from a collaborative program with IMF and holds significant importance for the country's future financial management.
Minister of State for Finance Ranjit Siyabla has said that the new liquor license will be issued only based on factors such as the country's population and tourist arrivals.
He said this in response to questions from reporters about allegations that the government is working to transfer 55 of the 100 liquor licenses owned by Satosa to other companies. Commenting further, the State Minister said that there has never been a time when taxes collected from liquor establishments were so carefully and systematically collected, and also as alleged, they were not asked to issue liquor license belonging to Satosa. Moreover, he stated that he also informed that liquor license cannot be leased out to another person even if such requests are made. The government also aims to control the production of illegal liquor. Adding on, he said that if liquor license is issued for a particular area, the opinion of the Divisional Secretary and police must be sought, and they will not take any action to grant liquor license to those areas at any time when reasonable objections arise.
The Board of Investment Chairman Dinesh Virakodi said that the establishment of a new economic commission in Sri Lanka is aimed at strengthening the investment climate and to enhance national competitiveness.
The Economic Commission hopes to create a genuine one-stop shop or single window and provides clarity on the key roles of the institutions in the investment and expert facilitation space and provide the required structure to take fast and active decisions. Virakodi said that the final goal will be to improve the ease of doing businesses. What is important, the BOI chief noted, will be the national policy on economic transformation. The policy will set several economic targets that include the GDP must reach 5% per annum by 2027 and increase 5% from then on, the total level of unemployment in the country to be below 5% by 2025, ensure that by 2030 female participation in labour force must not be below 40%, hold the current account deficit at less than 1% in the event the country experiences such a deficit, and to see the growth in foreign direct investments to reflect 5% of the total GDP by 2030, as well as a shift in FDIs towards the export of goods and services by 2040.
President Ranil Wickremesinghe has said that Sri Lanka will resume a student insurance scheme called Suraksha, which stopped in 2022 due to the economic crisis.
He said that the coverage will extend across all types of schools and include students from low-income families earning less than 180,000 rupees annually. The President said on a social media platform X that Suraksha student insurance will cover 4.5 million students offering health, accident and life insurance. Health benefits include up to 300,000 rupees for inpatient care, 20,000 rupees for outpatient services and critical illness coverage up to 1.5 million rupees. Accident insurance ranged from 25,000 rupees to 200,000 rupees covering disabilities. Life insurance provides 75,000 rupees per child if a parent passes away, with a maximum of 225,000 per family. Wickremesinghe implemented the Suraksha student insurance in 2017 when he was the Prime Minister.
Let's move on to a short commercial break now. Some detailed updates from the Colombo stock market coming right away. This is the Nightly Business Report. Welcome back to the Nightly Business Report. As we reported last week, the Colombo Stock Exchange, in consultation with the Securities and Exchange Commission of Sri Lanka and industry participants, has announced the settlement cycle for equity transactions will be reduced from T+3 method to T+2 method, with effect from 10th June 2024. To get an in-detailed idea of this transition and its reasoning, let's go to the Colombo Stock Exchange. This is Nishantha Batagala from Colombo Stock Exchange.
The Colombo Stock Exchange, with the Securities and Exchange Commission of Sri Lanka and industry participants, have decided to bring down the equity settlement cycle at CSE from T+3 to T+2 with effect from 10th June 2024. The concept of settlement cycle plays a pivotal role in ensuring smooth and efficient trading process in the stock market, as it determines when the securities and funds are exchanged between buyers and sellers after a trade takes place. Reducing the settlement cycle will create great efficiencies in the market, including reduction of operational risks, liquidity needs, margin and collateral requirements.
No matter how the week unfolds, the Colombo stock market always ends the week on a positive note. Today the market closed with gains after 2 consecutive days of losses, wrapping up the week in a positive trajectory. To get the latest insights, let's go to Netmi Fernando from First Capital Holdings.
Thank you. Following 2 consecutive days of dull market performance, the ASPI made a remarkable turnaround, closing strongly in the positive zone at 12,349, marking a significant gain of 132 points and maintained a bullish sentiment throughout the day. Similarly, the S&P SL20 index also experienced a positive trend, closing at 3,667 with a gain of 59 points. Noteworthy was the heightened investor activity in banking stocks, particularly with leading banks like Commercial Bank, Hatton National Bank and NDB Bank emerging as top contributors to the day's upward movement. Additionally, the release of the fourth quarter financial year 24 results, revealing a remarkable 123% year-over-year growth in earnings for blue chip counters such as John Keel's Holdings, further fueled the ASPI's gain. Furthermore, the recent reduction of interest rates at the weekly T-bill auction, where yields dropped by over 25 basis points across the board, with full acceptance, indicates a shift in investor sentiments towards alternative investment options. Consequently, there's a noticeable transition from fixed income to the equity market, underscoring investor preference for higher yield opportunities. This shift is fueled by active participation from high net worth and institutional investors, resulting in an improved turnover of LKR 1.5 billion. Significant contributors to this turnover were observed from the banking and the capital goods sectors. Moving on, top gainers for the day included Nation Lanka Finance, Agstar non-voting share and Colombo Investment Trust, while top losers for the day were LVL Energy, Rights Issue and Waskadua Beach Resort.
Sri Lanka's Treasury's yield fell across maturities at yesterday's auction, with the 3-month falling below 9.0%. This week's auction was conducted earlier than usual due to the upcoming special holidays. To give us a summary and the secondary market outlook, let's connect Dimantha Matthew joining us from First Capital Holdings.
Thank you. So this week, being a shorter week, we saw the Treasury bill auction being held yesterday, and during the auction we saw a significant decline in Treasury bill yields, and we saw the 3 months bill for the first time falling below the 9% mark after 2 years to reach 8.76%, while the 6 months and 1 year was at 9.17% and 9.29%. So with this, what we have seen is that in the market, we've seen significant increase in the liquidity levels and a continuous fall in yields across the board. And right now, we are seeing the shorter tenor yields falling significantly. In addition to that, there is a positive sentiment that is also there in the market, that we are quite close to the completion of the external debt restructuring. So there is higher demand coming into the market. So compared to the offer amounts of 160 billion this week, the bids came up as 370 billion. So you can see the high level of demand that was there in the market, resulting in a significant decline in treasury bill yields. And this followed up in the secondary market activity as well, where we saw the shorter tenors falling in line slightly below, even below the treasury bill yields that the auctions recorded. However, the mid tenors stood still, while there was some buying interest that came into the long tenors as well, especially the 2032 bonds.
Gold prices fell in Asian trade today, pulling back further from record highs as anxiety over US interest rates grew ahead of more cues from the Federal Reserve. Spot gold fell from 0.2% to $2,415.61 an ounce, while gold futures expiring in June fell 0.3% to $2,418.75 an ounce. Spot prices still remained in sight of their recent peak of $2,450.06 an ounce. Losses extended into industrial metals, with copper prices pulling back further from the recent record highs as a speculative frenzy in the red metal cooled ahead of more cues on physical supply and overall demand. A steady dollar also weighed on metal prices, while safe haven demand for gold cooled amid little signs of worsening geopolitical conditions in the Middle East after the Iranian president was killed in a helicopter crash. Oil prices also fell today as industry data showed an unexpected build in US inventories, while persistent concerns over high US interest rates also kept sentiment subdued. Brent crude oil futures expiring in July slid 0.6% to $82.40 per barrel, while West Texas immediate crude futures dropped 0.7% to $78.13 per barrel. Oil was on track for a fourth consecutive session of declines as concerns over lackluster demand and reduced geopolitical tensions in the Middle East prompted selling. Additionally, warning optimism about an economic recovery in China, the world's top oil importer, further dampened sentiments in the oil markets. The Sri Lankan rupee has depreciated slightly against the US dollar today in comparison to yesterday, according to the data issued by the Central Bank of Sri Lanka. Accordingly, the buying rate of the US dollar has increased from 294.78 rupees to 294.82 rupees, while the selling rate has also increased from 304.31 rupees to 304.48 rupees. The rupee has recently experienced further depreciation against several global currencies. Let's take a closer look at the latest exchange rates. Let's take a short break. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Cinnamon Life, a high-end 687-room hotel owned by Sri Lanka's John Keells Holdings, has begun marketing and accepting bookings to start operations in the third quarter of 2024.
Chairman Krishan Balendra told shareholders in the annual report that in April 2024, the contractors of the project started the handover of the building to enable Cinnamon Life to complete the final stages of furnishing, equipping and the interior works for the rooms and common areas. Cinnamon Life carried out by various activities including participating in international trade fairs, conducting interviews and providing briefings to travel publications and direct market initiatives for selected market segments to increase awareness on the hotels and its offerings given the implemented commencement of operations of the hotel. Cinnamon Life will have a range of ballrooms and banquet facilities including an exhibition center that can accommodate meetings, incentives, conferences and exhibitions events up to 5,000 seats. The hotel is a part of John Keel Holdings City of Dreams Integrated Resort with a casino by Melco Resorts and Entertainment Limited and a hotel also known by its Noah brand.
Sri Lanka's John Keel's holding group, which has interests in hotels, logistics and financial services, has reported profits of 7.3 billion rupees for the March 2024 quarter, helped by stronger margins and higher net interest income.
The group reported earnings of 5.17 rupees per share. For the year to March, the group reported earnings of 8.06 rupees per share on a total profits of 11.2 billion rupees, down 18.1 billion rupees in the interim accounts filed with the Colombo Stock Exchange. Group revenues for the March 2024 quarter was up by 19% to 86.6 billion rupees, including 4.5 billion rupees from the insurance unit. Cost of sales went up 16% to 63.8 billion rupees and gross profits were up by 30% to 16.7 billion rupees. Finance cost fell from 5.4 billion rupees to 2.4 billion and finance income went up from 3.4 billion rupees to 7.1 billion rupees. The firm said bunkering volumes went up 50% due to the Red Sea crisis in the March quarter, though domestic sales seen an economic crisis were no longer there.
Kahanda, a flagship hotel of KK Collection, proudly announces its membership in Serendipans and prestigious association renowned for its commitment to excellency in luxury travel experiences. This partnership signifies Kahanda's dedication to upholding unparalleled standards of hospitality and further solidifies its position as a premier destination in Sri Lanka. Serendipians, a distinguished community of luxury travel agencies, hotels, resorts and travel experiences, is synonymous with exclusivity, sophistication and impeccable service. With a rigorous selection process, Serendipians curates its membership to ensure that each establishment embodies the epitome of luxury and delivers extraordinary experiences to discerning travelers worldwide. Munchie, the flagship brand of Ceylon Biscuits Limited, has once again triumphed as the nation's most cherished product brand, as announced by LMD's Brand Annual Ranking 2024. Garnering the prestigious #1 position in the most loved product brands category, Munchie reaffirms its status as a symbol of Sri Lankan pride and excellence. Ceylon Biscuits Limited Group Director Rasit Wickramasinghe remarked that they are immensely proud of Munchie's remarkable achievement in being recognized as #1 most loved product brand in Sri Lanka by LMD. He added that this accolade is a testament to their unwavering commitment to excellence and their deep-rooted connection with its loyal customers. A short commercial break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian markets were mixed in caution trading today, with the most of regions' benchmarks climbing after US stocks hit new record highs. Tokyo's Nikkei 225 fell 0.6% to 38,719.35 after Japan reported that its trading deficit rose last month as rising costs from imports outpaced an 8% rise in exports from the year before. The data were weaker than analysts had forecast. Hong Kong's Hang Seng Index gained 0.4% to 19,288.93, led by EV makers including Peng, whose shares jumped 13.5% today on better than expected earnings in the first quarter. The Shanghai Composite Index logged slimmer gains, rising less than 0.1% to 3,158.64. In South Korea, the Kospi edged 0.1% higher to 2,726.35, while Australia's S&P ASX 200 was up less than 0.1% to 7,855. On cryptocurrency now, Ether was set for its largest two-day gain in nearly 2 years, amid speculation about the outcome of applications for US spot exchange-traded funds that track the world's second biggest cryptocurrency.
Ether, the world's second biggest cryptocurrency, was set for its largest two-day gain in nearly 2 years on Tuesday, on optimism that spot exchange-traded funds for the digital asset may soon be approved. Ether was up more than 8% on the day at nearly $3,780 after jumping almost 14% on Monday. Top cryptocurrency Bitcoin also rose, now just 4% shy of its March peak of over $73,800. The U.S. Securities and Exchange Commission is set to rule on the spot ETF applications this week. Analysts and investors said Tuesday's crypto gains were a result of unconfirmed talk that the regulator might approve them. Investors had previously thought they would be rejected, given that the SEC had not engaged with the exchanges and issuers who had filed the applications. But in a surprise move, SEC officials on Monday asked the NASDAQ, Chicago Board Options Exchange, and the New York Stock Exchange to quickly make updates and changes to their filings, requests which usually precede approval, according to Reuters sources. Bitcoin rallied sharply earlier this year after the SEC gave approval to several spot Bitcoin ETFs, which have seen billions of dollars in inflows. So far in 2024, Bitcoin has gained 67%, but Ether is now close behind with a gain of 60%.
AstraZeneca aims to grow revenue by 75% to $80 billion by 2030, boosted by the expected launch of 20 new medicines and through growth in its existing oncology, biopharmaceuticals, and rare disease portfolio.
AstraZeneca aims to grow revenue to $80 billion by 2030. That's a rise of about 75%. The drug maker believes it will be boosted by the expected launch of 20 new medicines. It also sees growth in its existing oncology, biopharmaceuticals and rare disease portfolio. It earlier expected to launch at least 15 new medicines between 2023 and 2030. The Anglo-Swedish company reported total revenue of $45.81 billion last year. CEO Pascal Soriot has rebuilt the company's pipeline of new drugs since taking over more than a decade ago. He said Tuesday that many of the new medicines AstraZeneca plans to launch have big potential, and he thinks they could generate more than $5 billion in peak year revenues. Shares in the firm rose 1% in early trade, ending a 6-day losing streak. AstraZeneca stock has gained about 15% so far this year, underperforming rivals like Novo Nordisk and GSK.
Well, that concludes today's Nightly Business Report. With the next 2 days marked by mercantile holidays, the Nightly Business Report will be back on Monday. Until then, I am Sanri Mudan Nayaka. Have a great holiday.